Well, hello. Hi, everybody.
Hi,
Everybody
everybody.
who's joining us live and everybody who is watching a recording of our Multifamily Her live stream. Uh, Zora, do you want to introduce yourself and then I'll go?
Yeah, thanks everyone for joining us today. My name is Zoria Belanger, and real estate investor in Edmonton. And we are focusing on buying multifamily buildings in Edmonton and starting in the US. So, yeah, we're here every Saturday at 1 p.m. Mountain Time to basically answer questions, just educate and inspire other women to do the same thing. And to basically, wherever you are in your journey, we hope we can help you by being here.
Yeah. And my name is Ilona Carletti, and I'm a real estate investor out of Edmonton, Alberta. And my team and I specialize in brand new small multifamily buildings that cash flow and we invest in Edmonton. So, what are we talking about today? Today, we'll be talking about investing in old versus new multifamily buildings. And guys, feel free to leave your comments in chat. I think we figured it out how to see your comments and how to put them on the screen. So, we'll be happy to answer questions and see where the conversation takes us.
Absolutely. So we thought when we started talking about old versus new, so we have invested mostly in new multifamily. And then the rest of our residential portfolio has been like older. So yeah, a lot of people have asked, yeah, why do we focus on new builds rather than the older properties? And so I wanted to go through a bit of that. And I have it kind of on a PowerPoint. So I wanted to share that. So we're going to try to do that now. So that'd be easier. So share screen. Okay.
Yeah, because
So old versus new. So
investing
let
in
me know how
new,
that looks like.
yeah, there are pros and cons of both type of properties. And today we wanted to show you some of the pros and some of the cons of new builds and old multifamilies.
So Ilona, does that look good on the screen?
I think so, yes.
Okay. So yeah, let's start with a new multifamily. So some of the pros to them are lower repairs and maintenance because you're buying brand new. You're not going to have all the upkeep and all the things breaking down that you'll get in an older property. Secondly, these brand new properties, they attract really good tenants. You're starting with a really good, you just have a good tenant demographic. And that's one thing you want to consider when you are starting to invest or getting into multifamily is what kind of tenants do you want? And even if you're not the one doing the property management, like what kind of tenants do you want in your business? And
And
they're generally, yeah, lots of people are attracted to these and they're just generally they'll have easier tenants to deal with.
may I add here, Zoria, that guys, tenants are your one of the biggest risks when you invest in real estate. So if you don't have good systems set up or you don't know how to deal with tenants, and depending on what kind of tenant demographic your property is attracting, that will impact your return on investment at the end because you will have added cost of repairs, maintenance, which is usually is. You're supposed to be putting money aside for that every month, but tenants are posing an additional cost.
Yeah. And so what you get with a newer product is you get your choice of tenant because you
Mhm.
will attract everybody. So you have your choice. So you have to still have good filters and good practices in place for choosing the right tenants, but you have a better choice when you have a new build. And for that reason, also, yeah, they are lower risk. And overall, like the way why I know they're lower risk is from like a lender's perspective. Because brand new, they are just lower risk. So you get better financing in place because of that. So it's not just us saying that they're lower risk or other landlords, but from the lender's perspective, they're considered lower risk. And so, yeah, because of that, you get better financing terms, lower interest rates, and also lower insurance. So that all helps with cash flow. For example, on our other new build, this is a picture of our sixplex that we have. We got a 40-year amortization with CMHC because it was a new build, and you can only get 40 years if it's new. They are, new products, have come on the market lately. Affordable housing programs where you can get 50-year amortizations. But if you stick with like just the basic CMHC financing, not considering the affordable housing programs, you can get 40 years, which you can only get when it's new build. Otherwise, it would be 35 years. And the reason that is good is because it lowers your monthly mortgage payment. And so then you can have more cash flow. And yeah, they're just great as a long-term investment because, you can still hold it for 40 years. You can hold it for 10 years. And when people are buying it from you in 10 years, they're going to still consider it a pretty new product. Oh, it's only 10 years old. So it's just fantastic to hold for 10, 15, 20, 40 years. Right? It has that lifespan. Some of the cons, so for new builds, your money will be tied up during the build. So you're not like making a return on that money that you've put on as a deposit, or if you're getting construction financing, like there's a little bit more costs up front. You're not getting the initial like return right away. But once it is up and running, then it's good. And then higher closing costs if you do need to get some temporary financing. So this is kind of what happened with our sixplex and what's happening with the eightplex that Ilona and I own is that, we have to get initial financing in place and in order to close, and then we have to refinance with CMHC later. So that is really adds to the upfront closing costs and upfront costs of the build. But yeah, so that's just something to keep in mind. Anything to add, Ilona?
Yes, I actually wanted to add on the insurance aspect of it. It is a lot easier to insure a new multifamily building than to insure an old multifamily building, because in the new multifamily buildings are built up to the current code. Insurance companies are comfortable, and we went through this exercise just last week. We are currently shopping around for insurance rates for our new eightplex. And the questions that insurance companies are asking us about the type of wiring, the type of plumbing, it's not even an issue in a new building like what we're investing in now. It doesn't give us a headache that insurance company may ask us to upgrade electrical or upgrade plumbing and bring it up to code, which would be an added cost.
Yeah. Sorry, I'm going the wrong way. I know I have a slide. Sorry. Oh, no, I don't think I have it here. Why do people invest in older property then? Like, what are if the insurance is higher and financing isn't as good, like, why would you invest in older product? I'll just leave it here.
Still has its merits.
What's that?
Has pros. It still has its
there's
merits,
still like there's pros and cons really to any strategy. So let's go through the pros and cons for older buildings. So one of the main attractions to buying older property like this is that you can renovate it, and you can basically do the BRRRR model with multifamily. That a lot of people are familiar with residential. Well, it's the same thing with multifamily. And that strategy is you buy it, you renovate it, you rent it, and then you refinance it, and then you repeat that. And what's really great with multifamily is just the way, probably not going to get into it today, but how multifamily buildings are evaluated. And when you renovate a property, you can really force the appreciation. You have a lot of control on what the value is going to be after the fact, because it depends on the rent that you're getting, not as much on comparables. So the advantages of older is you have that opportunity to increase the value, refinance it, and pull out a bunch of money, which you can't really do in the older. In the newer product, it's buy and hold is basically the strategy. But you can do this BRRRR strategy with the older buildings.
Yes, and it's a very popular investing in old multifamilies. It's a really popular strategy. And Zora, do you want to talk about how to you bring value in a old multifamily, because that's also an added benefit, or why
Yeah,
people decide to invest in an old multifamily building where you can
yeah,
actually increase and force appreciation of the property.
yeah. So the when you're thinking about that, you want to the way that you because the value is based on the income you're bringing in. So you want to think about what things will increase the income, what things will increase the rent. So the so you're asking like what kinds of things you could do. Well, just renovating the space itself and improving it will allow you to increase your rents. Other things that can be done is like just adding like dishwashers, adding in-suite laundry, so all sorts of different things that you can then charge a little bit extra for. And it's not just that extra rent that you're looking at. It's not the $50 extra a month that you're getting. Um, it's the value that that's actually going to provide to the building. And I guess I could bring up the
Yeah, there's
formula,
a
but
really neat formula that you can calculate.
yeah, why don't I just bring up the formula? We will get into that.
Yeah. And guys, leave your comments, leave your questions. Oh, I see a couple of comments here. Hold on, guys. Oh yeah, hi, Nicole is saying a wonderful model for multis. Yes, for sure. And
I think
have
I
your
have
multi
the
buildings have babies. I love that. Yeah, that's how your multifamily buildings have babies. When you
yeah, exactly. That's how you can grow your portfolio.
yeah.
And so, can you see this formula?
Yes.
So this is the formula that why we get excited about older buildings is that the value of the building is based on increase the income and decreasing the expenses. It's based on your NOI, which is income minus expenses divided by the market cap rate. So what ends up happening if you increase your income by $50 a month, multiply that by 12 months, and that would be like $600 a year. If you divide that by the market cap rate, say it's 6%, that's the value that you're increasing in your building. So I don't have a calculator right here, but you do 600 divided by 0.06, and that's how much the value of your building has gone up. And it's a lot more than just the $600.
I was looking for a calculator. I don't have it here either.
Let me do
Yeah,
it quickly.
so that's really powerful. A powerful way.
600, I can do it right now. 600 divided by 0.06. So that's $10,000. So you just increase the value of your building by $10,000. So that's the power in it. And that's why it's really attractive strategy. Even though you are, the cons of the older buildings is that, you're going to have a little bit higher risk because you are potentially, going to have to upgrade a lot of things potentially. You don't know what else you're going to uncover when you're doing those renovations. But yeah, obviously there's ways to mitigate that risk, do proper inspections, know what you're buying. But your insurance costs are going to be higher. It might be harder to get financing, and it's just not as of a long-term strategy. Like some of these buildings that are already 60 years old, like how much life is left in them before the best strategy is just to tear it down and build something new.
That's why, like, we hear investors always complaining about how much insurance rates have gone up when they buy an old multifamily building, that they haven't even expected that, because the previous owner was paying this amount, which was very reasonable by today's rates. And then the new owner buys the property, shops around for rates. And even if you're going to the same insurance provider for the same property that they insured with the previous owner, the rate is not guaranteed to be the same.
Yeah,
In
exactly.
fact, it's guaranteed to go up. That's what we've been seeing in the community.
Yeah, it's significantly higher, and it's because the insurance companies see those properties as higher risk. They're more likely to have pipes that are going to leak and or sewers that are going to back up. So unless you then go in and like tear that all out and replace everything, although the bones of it is still going to be 60 years old. So I don't know if your insurance rates are going to go that down much. Yeah.
Yeah, for sure. Yeah, thanks so much for your comments, guys. And I had a thought about multi, and then started reading the comments, and it disappeared. But Sean is saying again, this is very powerful on multifamily forced appreciation. It's amazing. Yeah, we like forced appreciation too. It's like in multifamily, it's forced appreciation on steroids when you apply the strategy. And Nicole is saying that in Texas. Pavel, Diana is saying, I'm not sure if I missed it, but what does the cap rate mean and how do you know what it should be? Yeah, that's a really good question. Do you want to tackle that question, Zura? And then we'll go to Pavel's question.
Yeah. Cap rates. I know that Pierre Paltrejon has a really good webinar about cap rates. It's a big topic, but in general, that's kind of how you can compare one property to another. It is in one way a measure of risk, but you'll have, I guess there's two types of cap rates. Cap rate is, there's going to be a cap rate for the market, and then there's going to be a cap rate for your property. But essentially that formula, if you turn it around, the cap rate is the NOI divided by the value of the property.
So yeah, when you're looking at different multifamily buildings, usually, and talking to investors, usually investors want to know the cap rate. Yeah.
And it's essentially like the basic definition is if you didn't have any financing on that property, it's the return on that property. So if you had no mortgage, it was just the income and the expenses, not including financing, it's basically the yield on that property. So if you have a higher cap rate, like a 10% cap rate on a property, that means it's like the cash flow is really good. You're getting really good yield on that property. But likely you're only getting that because it's it's also a measure of risk as well. Like usually if it's a higher cap rate property, it's also risky. It could be in a lower somewhere in like a small town maybe that so you'll see lower cap rates usually means like lower risk, and that'll be like the brand new apartments in like downtown will have a really low cap rate because they're considered lower risk. But yeah, I hope that. But yeah, you generally will have a cap rate for the market, and that's how you can compare one property to another. And then you'll have your own cap rate just for your property, which is calculated by basically taking the NOI, the income minus expenses, and divided by the value of your property, and that'll give you the cap rate for yours. So it's just that formula moved around.
And I think, Zora, income meaning before you pay for mortgage, correct? Or I remember there was a specific there for how to calculate it.
Yeah, it's your income, all your rent, and you minus your expenses, but not including your financing expenses. So not including your mortgage payment.
Otherwise, you will be getting a very wacky cap rate.
Yeah. But I can happy to kind of send you more information on that.
Yeah. And Diane, it's a formula that you can plug numbers in. So there's a conversation here about rent control in New Brunswick, and I see that Nicole was answering that they're capped with how often in New Brunswick you can raise rents, but not how much. And then there is a question that relates to cap rate here. So if you need to wait 6 months before hiking the rent, yet there is no cap, how much you can go up? I'm not sure if I understand.
I think he's asking like, and I hope people aren't getting confused with cap rate versus like having a rent control in a market and having a cap on how much you can increase your rent. Those are totally two separate things. So I think they're talking about, rent control. It's different everywhere. We're in Alberta, and there's no cap on how much you can increase the rent. But you still have to follow the lease. and you can
That
so
was
win
not
a
a question for us.
what's that?
That was not a comment for us.
Oh, it wasn't a comment for us. Okay.
Yeah.
But yeah, we can talk about that. That's a bit of a different topic. But
Thanks
yeah,
for sharing that, Nicole.
yeah, no
Yeah.
problem. Yeah, we're gonna also keep it short today. So we wanted just to talk about the pros and cons of it, and obviously we didn't go much into detail about
Yeah.
about it, but it gives you an idea of some of the pros and cons to old versus new. And if you want to reach out to us some more and talk a bit more about it, but why we chose new, we'd be happy to do that.
And if you want to know the cap rate on our building, it's at 5. So we are very comfortable with that cap rate. It just shows that we do have cash flow, and then the risk is not that high. We are in A type neighborhood, A type property, which means that it's just newer type of construction and a desirable neighborhood.
Yeah.
Okay,
Yeah.
well, anything else? Maybe we can do a quick update on our eightplex before we say goodbyes. We are actually going to see it tomorrow, so we'll take some pictures. And we see that the sliding started, and they started building our garages, which we are super excited about. The weather is warmer now.
Yeah. Yeah, so if people don't know, we're building eightplex. We're taking possession at the end of this month. So there's a lot going on in these last few weeks to get everything done, and we're just watching the progress and keeping an eye on it, making sure that all our team knows what's going on, and the actual progress. We have everything. The siding started, the garages are started, so we're looking forward to seeing that complete. But we have a lot of people working on it. Like when I stopped by the other day, they were like, the flooring guys, siders, garage. There were like at least 3 different trades there at the same time.
Yeah, it's so great to see your vision come reality. Something that you envisioned, and now you see this building. So it's awesome. All right. Well, on this note, thank you very much, everybody, for joining us. And we are here every Saturday at 1:00. Please join, say hello next time, ask your questions, and we'll see you next time. Have a good weekend, everybody.
Bye, everyone. Thanks for joining.